Dzień dobry, moim gościem jest Hiten Savani, zarządzający z Fidelity International, który odpowiada za fundusz Fidelity Absolute Return Global Equity Fund. To, co jest interesujące, to przede wszystkim strategia, za którą Hiten odpowiada, bo jest to strategia absolutnej stopy zwrotu oparta na koncepcji long short. I o to dzisiaj Hitena zapytam. Z mojej perspektywy istotne jest również to, że Hiten ma 20 lat doświadczenia na rynku funduszy. Od tylu lat odpowiada za różne strategie. Fidelity jest od 2010 roku. Hiten, I'm happy to have you here. I've got great opportunity to ask you a questions referring to the product that is quite new and refers to the strategy that is not popular in Poland. Please explain how you run long-short strategy in global fund and what's the main attitudes of this approach and what the client may receive in investing in such a strategy.
Well, look, it's great to be here. Really what we need to say about this strategy are two or three key things. Firstly, the aim is to deliver the rate of cash, and in this case it's US dollar SOFR cash, plus 3 to 5% on an annual basis through the cycle. That's the performance target. And we aim to do this with a volatility of about 5 to 7%. So quite a low volatility for what is quite a significant return, especially as cash rates have increased. And we've launched this strategy 3 years ago. So we've just crystallized our 3-year numbers. And in that time, performance has been very strong. So over the last 2 years, for instance, the strategy has delivered about 10% return from a volatility of about 5.5%. Our aim is to capture our fundamental research analysts' best ideas. They rate companies within each industry on a buy to sell recommendation. And what we're doing in this process is buying the highest conviction buys and selling the lowest conviction shorts, and really trying to extract as much value from that as possible. And we use quantitative and qualitative techniques to allow us to do that.
Okay, so you described that you invest highest convenience, positive stocks, and you do not invest or have negative
conviction.
Yes.
Yeah.
And what you would say about client's approach? Because your approach is stand still, no matter what happens on the market. You are seeking for alpha, and the client has different approach. Is there any cycle, any demand for such a product? How you see that? Is it too short maybe to show it?
Yeah, I think it's really interesting when you look at the allocations people put into absolute return as a category. Really, if you think about it from the perspective of investing in in asset classes like equities or fixed income, when the nominal return on those starts to be challenged, and it will be, a lot of people feel that the markets are under quite a lot of stress now, a lot of fear in the market about cyclical recessions in the US. This is the environment in which people are looking for alternatives to generate strong and stable returns, and especially deliver returns that are uncorrelated to the traditional asset classes. And that's where a strategy like ours is able to take a significant role and help diversify. And absolute return as a category is a broad church. So there is, all kinds of strategies, global macro, statistical arbitrage. What we're doing is leveraging fundamental bottom-up research and doing that in a very consistent way with a very stable leverage profile. Our beta is 0, our leverage is 100 to 120 long, 100 to 120 short, and it's very stable in its characteristics. And that is, I think, what allows us to deliver a return stream that really is uncorrelated, because the source of return, the source of alpha, is our people, is the fundamental research our people are doing.
Okay, if you would be the private individual investor, and you have to remember that we are, very home-biased individuals, what would be the recommended proportion that the investor should recognize as attractive or optimal for their investments, and how is that solved in Western countries when those type of alternative strategies are more popular than in Poland?
Yeah, and this is a really important question, and one that really depends on the specific requirements of the individual. Now, typically, if you look at allocations to alternatives as a group, they range between about 5% and 20%. And again, that will depend on what your long-term capital return requirement is, and very specific to how much you've got invested in other asset classes. But typically, in allocations, we've come across anywhere between 5 and 20%.
Okay, you started to run this strategy 3 years ago, as you said, and why so late? And is this strategy has longer dividends of documents of being good for investors? How it was in the past? Can you describe us in the longer perspective?
Sure. We in our team have actually been managing strategies that capture our fundamental analysts' highest conviction ideas for over 2 decades. So we've been doing that for a long time. We've been running global long-only strategies using the same inputs, using the same philosophy, the same quantitative and qualitative approach. And now we felt, 3 years ago, it was a time when we were able to expand this and really take advantage of those sell recommendations, those short ideas, to add value from both the buys and the sells, and to deliver something that was beta zero. Clearly, there are many absolute return strategies that have come and gone that people perhaps have had a difficult experience with. We're very cognizant of that. We feel what we're doing is quite different in the discipline and the consistency with which we implement. And I think that is what's going to stand us in good stead. And over the last 3 years, we've seen interest rates go from 0 to about 5%. We've seen the oil price go from close to 40 to 130. We've had any number of geopolitical issues, the war in Ukraine. And through all of this, the strategy has been very consistent. And we're very pleased with that outcome. And we certainly hope that we're going to be able to weather future turbulence in markets in the same kind of way.
Okay. You gave us some interesting names like beta zero, seeking alpha. Could you please explain what beta zero means?
Yes.
I know it's low correlated asset, but if you could explain what exactly it means.
Essentially, the idea that your beta zero means that irrespective of whether the equity market goes up or down, the strategy that we have is not influenced by that. So if you had a beta of 1, if the market was up 10%, you'd be up 10%. What we're saying is that it doesn't matter. The direction of the equity market doesn't matter. It doesn't influence our ability to generate the returns. And in fact, what we're finding is we're gradually entering a world where the return on equities is likely to be range bound. There are any number of headwinds that are challenging equities. But within equities, the dispersion in the cost of capital is increasing. The dispersion in returns is significant, and it's that we're trying to capture. So by being short 110% and being long, say, 110%, we're able to neutralize the effect of the market and really focus on stock-specific risk.
Okay, those beta zero approach and seeking for alpha on long and short position, what revenue delivered to the investors for last 12 months? Can you please explain us the numbers?
So we have generated very strong returns. As I said, over the last 2 to 3 years on an annual basis, the strategy is delivered between 7.5% and 10%, and from a volatility of about 5, just over 5%. So very strong return to risk ratio.
Yes, I asked this question just to make more precise, because at the beginning you explained it's 5 points above free risk rate. Okay, yeah. You were explaining during your presentation the role of AI as well as your approach to ESG. Could you please statement the main facts of those two tools that you are using?
Absolutely. So I'll start with saying, with regards to ESG and sustainability, this strategy is actually Article 6 currently, but importantly, the fundamental research analysts that deliver the buy and sell recommendations, they're also the ones that do deep analysis into sustainability, into E, S, and G issues. and they also are generating recommendations on a scale from A, B, C, D, and E on each company. So there is a relationship between sustainability and fundamental research, and so there's a natural integration in what we do. On AI and artificial intelligence, clearly there's a huge amount of interest in this area. People are going somewhat crazy for this. We've been using artificial intelligence and machine learning algorithms for several years now, and we do it in a very specific way to help us draw our human attention to stocks where the qualitative view may differ slightly to what we're seeing quantitatively when we generate our scores. And it's those companies that we draw our attention to very quickly to ensure that actually we remove any companies that perhaps are not fully aligned, both quantitatively and qualitatively.
Thank you. One more thing that just came to my mind after reading the fund fact sheets is that the fund has a success fee in it. This is quite new phenomenon in Poland. I mean, the reborn of success fee is visible in Poland. What's your approach in that? And are you motivated to receive better returns because the fund has a success fee? How big is it? And on what factors it depends on?
So performance fees or success fees are there to help align the interest of the managers and the asset management company to the end client. The idea being, if you generate very strong performance, you deserve a better fee, and if you don't expect to get a good fee. So there is a very strong underlying principle about alignment of interests, which we believe in. It is important that these success fees are suitably calibrated. So in our case, it is the outperformance over the rate of cash at which is analyzed, and typically 15% is the performance fee. And that again is there to help align the interest and ensure we're highly motivated.
Okay, thank you very much for coming, for the conversation. My guest was Hiten Savani, portfolio manager at Fidelity International. Thank you very much.
Thank you very much for having me. Thank you.